But let me also welcome on board Dipan Mehta too. Dipan, it's been the talk of the town, this bat stake sale in ITC. What do you make of it?
So I don't think it makes any difference to the company's fundamentals, or for that matter, even the price movement per se, because BAT never had a very active role to play. It was just an investment for them. And all the difference it makes is that the weightage of ITC in the Nifty and other indices will go up because of higher free float, but that also marginally. So by and large, I think it's business as usual for ITC. And whatever challenges they are facing in terms of slow growth of the tobacco business, and not and the other businesses not reaching to their full potential, especially FMCG. Those are the concerns in my mind, and also the ITC hotels. I think that demerger was not up to the street expectations. So, given all of these scenarios put together, I think ITC seems to be pretty much well priced at this point of time, and I do not expect the tobacco business or the other businesses, to really grow significantly for the investors to pay a higher multiple for ITC, or for the stock to really outperform the Sensex and Nifty.
Dipan, what's your thought though on the private banking space? Because a lot of people are getting a little cautious with the PSBs, the more mid and small cap banks, and sticking by with the large private players. Also, they seem like a bit of a bottom-up story right now because they didn't quite participate in the rally that the market had up until last month. Where are your biases and preferences within the large cap banks right now?
Yeah, I think for us and a lot of investors, professional as well as amateur, HDFC Bank, ICICI, and other peer group large private sector banks are part of the core portfolio. And despite the underperformance, I don't think many investors have become extremely underweight in the large 4 or 5 banks, because they are the segment where you feel valuations are reasonable. There's good earning visibility, and these are the companies which really benefit from the India story, because end of the day, it's all about higher credit growth and also lending to the infrastructure and corporate sector, which is what these banks are able to do so. From that point of view, we remain very positive on these companies. Valuations, I think, are at historical lows for the likes of, say, Kotak Bank or HDFC or even ICICI for that matter. So there's a lot of comfort over there. But at the same time, I think base effect is coming into play. Their growth rates certainly have slowed down, especially HDFC Bank per se, and even Kotak to an extent. But then I think that's got priced in as well. What I think also is happening is that the RBI generally is trying to increase regulation as far as the competition to these banking sector is concerned, especially the NBFCs. And that may have a mildly positive effect on the entire banking sector. And if you compare the growth rates, credit growth, and other quantitative parameters, not just financial, between the private sector banks and the PSU banks, then still the private sector banks are growing at a far higher pace and gaining market share. So from a valuation point of view, from a growth point of view, and from a valuation point of view, we're very positive on the top 4 or 5 banks, private sector banks. PSU banks, you may still have a trading rally in them, but I'm not sure you can hold them for an extended period of time and make them as part of your core holdings.
Depend like a very blanket kind of an advice. If you own small and mid cap stocks, just reduce them or just hold on to them as long as you're confident of the story.
Well, in Nikunj, it all depends upon the quality of the stock, So, for example, we have a holding in Varun Beverages. Now it's trading at a very high valuation, I think almost 80 times plus trading 12 months. But it's been a great value creator. The company is growing at 25%, they're about expanding capacity. So therein lies the dilemma that, do you sell a stock which is overvalued but still growing? What do you do? And in my experience, I think remaining invested and anticipating that there could be a correction time-wise, price-wise is a better strategy. And, if you agree to give part of your gains but still remain invested, then over an extended period of time, what you get is a multi-bagger, because, stocks don't go up in a linear fashion. So I will extend this, this argument across the board to mid-cap stock, wherever there's quality, like Trend to an extent, or for that matter, some of the other quality stocks, like we have Praj Industries, which has done well. Within the banking space, NBFC, Credit Access, which has done well. Action Construction, the likes of that, Polymed. These are great companies, and they may be overvalued at this point of time because of the reasons that we all know. But then just selling them because they're overvalued is not a good strategy, because these companies continue to grow. but one should expect a correction, a steep correction, time-wise, price-wise, and a lot of quality mid-cap stocks. And if you are mentally prepared for that, then you can continue to hold on to them, but definitely not add to overvalued stocks to your portfolio.
Just want to go through the takeaways. A lot of IT majors did attend the City India conference as well, and the takeaway from there has been very positive. TCS is saying that FY25 growth is likely to be better than what they saw in FY24. Infy says no change in demand outlook for the next 3 months. Clients are waiting for some trigger before spending, but they're saying that there is no deterioration but no acceleration either. So status quo is the report card really from Infosys. Tech Mahindra stating that FY25 industry average growth is going to be about 3 to 5% L&T Tech saying early signs but flat to marginal positive budget is what they foresee for FY25. And Dipan, amidst all this commentary, we didn't realize that TCS was actually sitting at an all-time high. What is it that you make of the prospects of IT?
So I think to an extent, we are seeing better trends in IT. They are not yet there where they can go back to, kind of double-digit growth rates or mid-teen step of growth rates, but they're getting over there. And in the sense that the worst is over for the global economy, especially US and Europe. And we have this entire artificial intelligence wave, and that could, trigger a fresh increase in tech spendings globally, and that will benefit Indian IT companies. So I remain very positive on the IT sector, especially large cap IT. Again, I think if you have the patience and the holding capacity for 2-3 years, then these companies can certainly outperform the broader indices, I think. And it's a bit of a contrarian play also because the earnings have been pretty much flat, and you can expect an acceleration maybe a year or so down the line. So we remain positive on IT per se, and select mid-cap IT stocks also. I think if they're available at reasonable valuations, then certainly they could make an interesting investment opportunity, like so say Tata Elxsi or Tata Technologies, KPIT, Cummins, Coforge. These are companies which have the potential to grow at a significantly higher rate than the peer group and the industry as a whole, but they are expensive. And the key challenge is to invest in these companies at reasonable multiples, which can happen if there's a correction. But nonetheless, I think large cap IT and HCL Tech in particular, because of its slightly differentiated business model, is something which I think may do well over the next 2-3 years or so. Having said usual disclosure that we and our clients will be invested in many IT stocks, which I have named just now.
Dipan, appreciate your time. Thank you for joining us. Looks like that big ITC block deal has been done.
If you like this video, then like, share and subscribe to ET Now.